Hello, it is the GPT-4OL, and I want to test how the data analyst GPT created by OpenAI itself is actually doing right now. Previously I faced so many hiccups trying to analyze my data using the data analyst GPT. So I decided to run through data analyst GPT to see how it's actually doing right now. So let's get into it. So I'm going into ChatGPT Premium and I'm opening the Data Analyst GPT. So I'm saying here, give me a summary analysis of the attached document. I'm going to attach the document and I'm not going to tell the GPT what the document is about because I expect that it will figure out and analyze this document for me. So this is the 2019 IPO data I used in one of my last videos. You can check that video with the link above. I'm going to click enter. So analyzing the document. It's been able to specify what the document is about in less than 4 seconds. Okay, which is fair and brilliant. Okay, so let me just scroll to see if it properly got the summary. So it has done an overview of the Excel sheet. I'm stating out all the columns on the sheet, the IPO price, the current price, return on investment, company type, the industry. It's also looked at key insights, company type. So most companies are identified as SPACs. That is wrong. That is wrong. It says industries, companies span various industries, including aerospace, defense, auto tech, and semiconductor. Okay, semiconductor. Okay, data quality. Example entries. It gave us some examples of entries. That's just 2 examples, and it gave us its own conclusion, which says the dataset provides a comprehensive view of SPACs and other companies that went public in 2019, detailing their IPO performance, industry sectors, founding dates, and partnership details. Information is useful for analyzing trends in SPAC performance and industry-specific IPO success during that year. Okay, probably I'm saying ChatGPT favoring some kinds of statements. It favored the word SPAC, which are special purpose acquisition vehicles. It also favored semiconductors in a way that I did not expect it, to like favor it. So I'm just thinking in my head right now that does it have, like biases, to those particular words? Sorry, I meant the GPT, the data analyst GPT, not necessarily ChatGPT. Okay, so let's continue with the analysis. I said here, do an in-depth analysis of the data in the documents with regards to IPO price and return. So it took about 5 seconds to actually do this analysis. Would you blame it? No. What the data analyst GPT has given us. So it said the IPO price statistics. So the 231 IPOs with the median price of $14.3 and the maximum price of $72, which is very correct. Median 58th percentile price $13, 75th percentile price $17, which is correct. The IPO prices range from $4 to $72 with a median price of $13. Most IPO prices are clustered around $10 to $17, which is correct. Return statistics count 128 companies. The mean return is 29%. 25th percentile is actually negative at minus 68%, and the maximum at 1,144%. Okay, returns vary widely from a near total loss of minus 99% to a significant gain of 1,144%. The median return is minus 7.9%, indicating that more than half of the IPOs had negative returns. Wow, that is incredible. The average return is 29.2%, but this is skewed by a few high-performing outliers. So it's looking at the correlation. It says correlation between IPO prices and returns is 0.074. Okay, so the correlation between IPO price and return is 0.074, indicating a very weak positive relationship. This suggests that the initial price of the IPO does not strongly influence the return. All right, so we're looking at the summary, the in-depth summary, from the data analyst GPT. It says the IPO prices generally range from $4 to $72, with most prices between $10 to $17. The median price is $13. Returns highly variable, with a median negative return of minus 7.9%. The average return is positively skewed due to outliers. Okay, it's really important for us to know that, of course, you won't go into the stock market and want to buy every stock, or for example, if you had the opportunity, to participate in initial public offerings. I don't think anybody would want to buy every stock. So, of course, the data analyst GPT is just giving us average, without necessarily looking or going in depth into particular stocks. Okay. And also the correlation, it says there's a very weak positive correlation between IPO price and return, implying that the initial offering price does not significantly predict the return. It's also giving us recommendations. It says investors should not rely solely on the IPO price to predict returns, as other factors likely play a more significant role in performance. Further analysis investigates other variables, e.g. industry, company type, partnerships that might better explain the variability in returns. Then it says I should address missing values and ensure data completeness for more robust analysis, which is actually true. So this analysis highlights the importance of considering a broader range of factors when evaluating IPO performance beyond just the initial price. So to the next question. Which are the best performing industries in the data? Manufacturing technology 4.25%, health medical device 3.35%, electric vehicles 1.83%, health lifestyle consumer 120%, food beverages 112%, IT services 99%, communication 93%, health software 91%, hospitality 80%, insurance 78%. Which are the top performing stocks? I want to know the top performing stocks in this data. Alright, that was almost instant for it to deliver. So we're looking at the top performing stocks by return. Shockwave Medical, Carona Therapeutics, SciTime Corporation. So these are the top 10 performing stocks. But as you can see, we do not know the particular industries that they are part of. So I'm going to ask ChatGPT which industries represent the top performing stocks. It says here, health and medical devices, the top companies, Shockwave Medical, Transmedic Group, and Soliton, health and biotech, Carona Therapeutics, BioNTech, and Chiano Therapeutics, manufacturing technology, health, electric vehicles, food, and beverages. So it says here the top performing stocks are predominantly from the health, medical device, and health biotech industries, each contributing 3 companies to the top 10 list. Other industries represented include manufacturing technology, electric vehicle, and food and beverages, each contributing 1 top performing company. This indicates that health-related sectors, particularly medical devices and biotechnology, have shown significant performance in the analyzed dataset. That's brilliant. So we're asking it with regards to company type, which is the better performer between SPAC and company. Okay, it says here performance by company type. Special purpose acquisition company has an average return of 51%, while company traditional IPOs have an average return of 23.47%. SPACs have a higher average return of 51% compared to the traditional companies, which have an average return of 23%. This indicates that SPACs have generally performed better than traditional IPOs in the analyzed data set. How many SPAC are profitable versus company? Profitability analysis by company type. Total number of SPACs 52, profitable SPACs 36. Percentage of SPAC profitability is 69%, while percentage of traditional IPOs is 39.66%. A high percentage of SPACs are profitable compared to traditional companies. SPACs not only have a higher average return, but also a greater likelihood of being profitable. While you're following this analysis, please don't forget to subscribe to this channel. So the next question, analyze stock with IPO price below $10. So let's see what Data Analyst GPT gives us. Number of stocks 31, average IPO price $6.05, average current price 368, average return minus 41%. Detailed statistics. Alright, Data Analyst GPT has been able to give us a detailed statistics on the IPO price, the current price of the IPOs below $10. So the summary here it says overall performance, stocks with an IPO price below $10 generally perform poorly with an average return of minus 41.38%. The majority of the stocks have negative returns. Profitability, only about 12.90% of these low price IPO stocks are profitable. Variability, there is a wide range of outcomes with some stocks achieving significant positive returns up to 351.6%, while many experience substantial losses. Conclusion, investors should be cautious with stocks priced below $10 at IPO, as they tend to underperform on average with a low likelihood of profitability. The significant variability also suggests that these stocks carry higher risk. Brilliant. I think that is brilliant and perfect. Analyze stocks with IPO price above $9.5. So let's see what that Analyst GPT is actually giving us. So number of stocks 200, average IPO price $50.57, detailed statistics, minimum price $10, maximum price $72, current price, the minimum price is $0.01, while the maximum is $218 US. That's a lot. Okay, and the maximum return is $1,144. So the summary, overall performance, stocks with an IPO price above $9.5 generally perform better with an average return of 40.29%. This is significantly higher compared to stocks priced below $10 at IPO. Profitability, about 51.50% of these higher priced IPO stocks are profitable, which is substantially better than 12.90% profitability rate for stocks priced below $10. Variability, there's a wide range of outcomes, with some stocks achieving significant positive returns up to 1,144.80%, while others experience substantial losses. Conclusion, stocks priced above $9.5 at IPO tend to perform better on average and have a higher likelihood of profitability compared to those priced below $10. However, there is still considerable variability, indicating that while higher priced IPOs are generally safer, they are not without risk. So I'm going to be asking a tough question. Analyze the best industry to invest in. Let me do something else. From the data, can you analyze what to look out for before investing in any of these stocks? Based on the data analysis, here are several factors to consider before investing in these IPO stocks. Company types. SPACs have shown a higher average return and a higher likelihood of being profitable compared to traditional IPO companies. Traditional companies have a lower average return and a lower profitability rate. IPO price. Higher IPO prices. Stocks with an IPO price above $9.5 have an average return of 40.29% and a profitability rate of 51.5%. Lower IPO prices. Stocks with an IPO price below $10 generally perform poorly with an average return of minus 41.3% and a probability rate of only 12.9%. Industry. Top performing industries, health, medical device, and health biotech industries are among the best performers, with multiple stocks achieving high returns. Emerging industries, electric vehicles, manufacturing technology, food beverages also have notable high performance. Company fundamentals. Founded year, more established companies founded earlier might have more stability, while newer companies might offer higher growth potential but come with higher risk. Current financial health. Look at current prices and returns relative to the IPO price to gauge recent performance and market sentiment. Market and economic conditions. Market trends. Consider the broad market trends and economic conditions. Certain industries may perform better in specific market environments, e.g. tech stocks in a tech boom. Regulatory environment. Regulatory changes can significantly impact industries like healthcare, biotech, and electric vehicles. Partnerships and collaborations. Strategic partnerships. Companies with strong strategic partnerships often have better market positioning and potential for growth. For example, partnerships in the health medical device sector can indicate robust product pipelines and support. Risk factors. Volatility. IPO stocks can be highly volatile. Assess the stock's volatility and your risk tolerance before investing. Liquidity. Ensure that the stock has enough trading volume to allow for easy entry and exit. Historical performance. Previous returns. Historical return data can provide insights, though past performance is not always indicative of future results. Comparison with peers. Compare the stock's performance with similar companies in the same industry. Practical steps for investors. Conduct thorough research, use financial reports, market analysis, and expert opinions to gather as much information as possible. Diversify. Don't put all your money into one IPO. Diversify your investments across different industries and company types to mitigate risk. Self-investment goals. Define your investment goals into long-term growth, short-term gains, and choose stocks that align with these goals. Monitor investments regularly. Monitor the performance of your investments and be prepared to adjust your portfolio as needed. Very interesting. I think this is really interesting and to the point. So far, the data analyst GPT, analyzing this stock market data is actually doing an awesome job. So the next question, analyze the health software industry. So let's just go with that and see what it gives us. So let's do a quick rundown. So it has just 3 stocks, and average IPO price $13, average current price $26.41, which is not bad at all, and average return $91.37. So let's quickly go to the summary and see what it's saying. Overall performance, the health software industry shows strong performance with an average return of 91.37%. The IPO prices range from $10 to $17 with a median price of $13. Current price range is 15.8 to 35.89 with a median price of $27. Profitability. All stocks in this industry are profitable with returns ranging from 58.4% to 111.48%. The health software industry has demonstrated impressive performance with all analyzed stocks showing significant positive returns. This indicates a robust sector with substantial growth potential. Investors looking at this industry can expect strong returns, but should still consider other factors such as market conditions, individual company performance, and broader industry trends. This is actually amazing. From my analysis using the R programming language, I actually noticed something about the health software industry. That's why I specifically asked to see what the data analyst GPT, had to say about this particular industry. Analyze the IT services industry. Number of stocks 8, average IPO price $18, average current price $44.5, average return 99.3%, the maximum current price $136.85 US, and maximum return $290, which is not bad at all. Profitability, number of profitable stocks 6, percentage of profitable stocks 75%. Summary, overall performance, the IT services industry shows strong performance with an average return of 99.31%. The IPO price range from $5 to $34 with a median price of $15.5. Current price range from $0.10 to $136.85 with a median price of $30.67. Profitability, 75% of the stocks in this industry are profitable, with returns ranging from minus 98.09% to 290.03%. The IT services industry demonstrates impressive average returns and a high percentage of profitable stocks. However, there is significant variability in performance, with some stocks achieving very high returns while others suffer substantial losses. Investors should consider the specific characteristics and market conditions of individual stocks within the industry to make informed investment decisions. Analyze the software industry. So returns, minimum minus 20%, maximum 284%. Profitability, 6 stocks are profitable. Percentage of profitable stocks, 75%. Overall performance, the software industry has a strong performance with an average return of 63.35%. IPO price range from $9.4 to $26 with a median price of $10. Current price range is $7.50 to $65.55 with a median price of $11.76. Profitability, 75% of the stocks in this industry are profitable, with returns ranging from minus 20.21% to 284.82%. The software industry demonstrates solid average returns and a high percentage of profitable stocks. However, there is considerable variability in performance, indicating that while many stocks perform well, there are also risks of negative returns. Investors should evaluate individual company fundamentals and market conditions to make informed decisions within this industry. So for the next question, analyze stocks with IPO prices above $40. Number of stocks for average IPO price $52, average current price $28.5, average return minus 39.3%, standard deviation of return 39.05%. Detailed statistics: minimum $45, maximum price $72, current price minimum $10.43, maximum $47.89. The return so far, the minimum is minus 85.99% and the maximum return is 6.42%. Wow, which is very low. Profitability: number of profitable stocks, 1. Okay, only one stock is profitable. Number of profitable stocks, only one stock is profitable out of 4. So the summary: overall performance, stocks with IPO prices above $40 have generally performed poorly with an average return of minus 39%, and the IPO range is $45 to $72, and the current price range is $10.43 to $47.89 with a median price of $27.83. Only 25% of the stocks in this category are profitable, with returns ranging from minus 85.99% to 6.42%. Stocks with IPO prices above $40 have underperformed on average, with a significant portion of these stocks showing negative returns. Investors should be cautious with high-priced IPO stocks, as the data indicates a higher likelihood of poor performance. Careful analysis of individual company fundamentals and market conditions is essential before investing in these stocks. So I'm asking a final question: does company location affect the success of an IPO? To determine whether the location of a company affects the success of its IPO, we can analyze the data by grouping companies based on their location and then comparing the average returns and profitability. Here's how we approach the analysis. So it says group the data by location, country or state, calculate the average return for each location, determine the number and percentage of profitable IPOs for each location, compare these metrics across different locations. Let's proceed with this analysis. So analysis of company location and IPO success. Top 10 locations by average return. Germany, Canada, Los Angeles, US, Israel, India, Lanes, Australia, Missouri, US, Tennessee, US, Delaware, US, and Mexico. Alright. Percentage profitable. On average, Germany is seeing 7.8% profitability and then percentage profitable 100%. Okay, total IPOs just 1, profitable IPOs 1. Israel, total IPOs 3, profitable IPOs 2. Actually look at the summary, the stock summary for locations. Germany with an average return of 80.53% tops the list, although this is based on a single IPO. Canada and Los Angeles, both locations have high average returns respectively, with 100% profitability, each based on a single IPO. Israel with an average return of 217% and a 66.67% profitability rate. Israel stands out with multiple IPOs of 3. Other locations, various locations such as India, Lanes, Australia, Missouri, USA, Tennessee, USA, Delaware, US, Mexico have high average returns and 100% profitability, but each with only one IPO. Conclusion: high returns and profitability. Locations like Germany, Canada, and Los Angeles show high returns and perfect profitability, but are based on a very small sample size. Multiple IPOs. Israel shows strong performance with a high number of IPOs and good profitability. Small sample size. Many locations have only one IPO, making it difficult to draw broad conclusions about the impact of location on IPO success. Recommendations: consider locations. While location can be an indicator, it's essential to consider the small sample sizes for many locations. So there you have it. Hope you enjoyed going through the Data Analyst GPT by OpenAI with me. What percentage am I going to give this GPT Previously, I would have given the data analyst GPT a 55%, but right now, specifically tailored to just analyzing data. I didn't ask the data analyst GPT to give me any form of chart, but of course, you saw that it gave me a table, when I queried about locations and returns, in comparison to locations. It gave me that table even if I did not ask it. So for GPT 4.0 era, I will give the data analyst GPT 90%. Okay, until I'm done running through this GPT, in other formats, like trying to get charts from it, trying to get other kinds of data from it, and downloadable sheets and all that. So I hope you enjoyed going through all of this analysis. Please do not take this as investment advice. If you want to invest, make sure you talk to a financial advisor to get guidance for your investments. Hope you enjoyed going through this video with me as much as I enjoyed making it for you. Please don't forget to like, share, turn on the notification bell, and above all, subscribe to this channel to enable it get to more people, and to also expedite its growth. Thank you so much for watching, and I'm looking forward to catching you soon on my next video. Thank you.